This week on the podcast, we're going to talk about tariffs and tax cuts and immigration and kind of what it all means in a post-election possible financial forecast for 2025. So let's get into it this week here on Phil's Tax Hacks and Other Retirement Facts. Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist Phil Putney. Now let's get rolling with today's show. What's going on, everybody? Thanks for hanging out with Phil and I as we talk investing, finance, retirement. We're back this week. We're kind of breaking up our three-part series that we're doing currently for the month of November with a little post-election conversation. Phil, we wanted to kind of look at some ideas and some things to kind of talk about once we knew who the president was, and obviously we found that out. So I like the idea of talking a little bit about some of the tariffs and tax cuts conversations that are out there because everything else is obviously being dominated with, a bunch of the societal stuff and just, a bunch of things we didn't want to get into. So It's like, let's keep it financial.
Yep.
Let's look at some of the tariff conversations, some of the tax cuts, and even immigration a little bit on some of the cost standpoints and things there. But how you doing this week?
Doing good.
Yeah.
In the full swing of fall. So it's getting a little chilly at night, which is good.
Very true. So if we're talking money and stuff and finance, the market's been doing pretty good. So, over I think 7 days, I think the Dow was up 6%.
Yeah.
I think the S&P is up about 4.5%, something like that. So, so far so good on that front.
Yeah,
so
and markets are always forward looking. So I mean, they're really counting on a lot of these tax cuts that are being talked about. So
I was going to ask you,
building those into the equation already.
I was going to say, right, they're forward looking, right?
Yep.
So the market seems to be fairly pleased with the results.
Yep.
And we'll see how that changes, obviously, as administration actually takes form. But let's get into it. Let's talk about some of the tax cuts. I think the first big thing that could be on the radar is the extension of the TCJA, which we're currently under, right? The Tax Cuts and Jobs Act. But with some tweaks. I know President Trump talked about wanting to maybe add back in itemization, right? Or, being able to do some things. So some tweaks.
Right. Yeah. And I think one of the main adjustments, so to speak, that he's talked about is with what they call the SALT, the state and local tax deduction.
SALT.
Yeah.
Thank you.
Yeah. Because right now, I mean, that's one of the major limiting factors for those, at least, that are in a state that has a state income tax and property tax. Because the combination of that state and local tax, you're limited to $10,000 in deductions, which, for anyone that is in a state with a modest even state income tax and you have property taxes, it's not very hard to get there. So,
right. Yeah.
So taking that cap away, I think, is going to bring back itemization for quite a few people, if you're kind of teetering on the edge of that. So.
Gotcha. Okay, so that's an amendment. I think there's some tweaks they're looking to do.
Yeah, there's probably a couple other tweaks that they're looking to do. But I mean, the major thing is just the extension of that TCJA. Because when it was originally put in place back in 2017, starting tax year 2018, it was under the reconciliation process, which that has some limitations, right? They can only have a certain effect on the overall budget. They've got to somewhat balance it over a period of time. So that's why the original act, when it was instituted, the individual piece, the component that affect individual taxes, had this 10-year limitation, this window on it, because that's mathematically to make it affect the budget a certain way. That's the only thing that they could do.
Gotcha.
So, I mean, that's why we're facing this. And we've been talking about it for years that, the deadline, so to speak, is coming where they're going to have to do something with it. So.
Yeah. So I guess some of the proposals, right, is obviously since it was put together under his first administration, he'd like to probably see extended. So it could be a 7-year extension. It could be written in. There's things there. Right. But I think the big takeaway for folks to think about, especially for our demographic who maybe tunes into our show, is a lot of people had been thinking, hey, my timeline for doing Roth conversions is getting very small because there's only about a year and a month left if you really think about it expiring at the end of 25. If they extend that, well, now you could really put a strategy and you could still work on that strategy of Rothing over time, maybe.
Yeah. And that's, it is definitely a consideration and a factor to look at amongst many others. I mean, the point with all of this, though, is we're early in this process, right? I mean, these are just still hints at what they're thinking they're going to do. We have no idea
Right.
actually what this looks like. And any tax law change doesn't happen overnight. It's nothing that the president can do on day one through an executive order. It's something that
Right.
has to go
Correct.
through Congress, which we all know the process that takes. Even if there is a better chance with the control of the
The
presidency. And right, I
trifecta.
mean,
Yeah.
it makes it maybe a little bit easier. But at the end of the day, it's still a process that has to go through before we actually know for sure what this is. So, I always say with this, take that with a grain of salt. I don't think that should change anyone's overall Roth plan. But I mean, it's definitely something to consider that we do have possibly an extended window. What that looks like, are they going to push it out 2, 3, 4, 7 years? Are they going to make it permanent? How are they going to balance the other side of the equation though? Because there is a pretty significant cost if they make it permanent. So
Right. Well, and again, this is just forecasting.
right,
You and I are just
right,
talking about some things that are on the
yep,
radar. Obviously, there's a lot to go, but so let's talk about the lowering of the corporate tax rate. That's another piece on the tax side. So I believe it's what, at 20?
yeah.
I think that's part of the
21 is what it's at
TCJA.
today. Yep, yep.
21. Okay. And he's proposing, or they're proposing, maybe even reducing that further down, which obviously corporations would
Right.
love.
Well, and I mean, the hopes there is similar to the first time that it was done, is that it brings more of that corporate revenue back to the U.S. base, right? So,
And
and
manufacturing.
manufacturing, right? So, I mean, that is the hope in doing that. That yeah, it's a lower rate, but it should broaden the amount of revenue that's brought in, just because it's a lower number on a bigger base. So I mean,
Right.
that's kind of the overall hope in doing it. But again, we'll see what happens ultimately with it long term. But that is
Yeah.
definitely part of that extension of what they're looking at is maybe then also lowering the corporate taxes.
Well, so if you think about this stuff and you say, okay, well, then the next one on here is, and we'll kind of bring this all around full circle in a minute, but also the other big one that people are very excited about that could be
Yep.
there is the no tax on Social Security, which, has been changed a couple of times through the
Right.
years. So, my mom was like, whoo-hoo.
Yeah. Well, I mean, that's a discussion I've already started to have with, my clients and retirees. It's like, okay, hey, wait,
Right.
what's happening with this no tax on Social Security? It's like, well, let's put on the brakes. He talked,
We got a little
he
ways to
talked
go,
about it,
but
right? I mean, you
right,
probably are going to be lucky to see it in 2 to 3 years if it happens. Because there's
right,
a lot of things that need to take place. And I mean, that's a great, idea to have, and I brings us kind of back to the way Social Security was originally instituted when FDR first put it in place.
correct.
It did not have a taxation on it. That was part of the original plan. So I think it's a good idea, but at the end of the day, there's a lot of great ideas, but how are you going to pay for it, right? So we've got to try to balance this overall budget out of, okay, we've got these tax cuts. We'd like to not tax Social Security, not tax tips, and there's overtime, and there's all these other things that have been floated out there too. Well, that's great. How are you going to now balance the other side of the equation? Because if you take some of that revenue off the table, we're already spending at a deficit. How is this going to work long term?
Well, and I think we'll continue with that piece of this conversation. So, estimated cost is being floated around out there at around $6 trillion for some of this stuff. Obviously adding to the national debt, but let's talk about the next piece because again, I think it looks like they've been planning for a while. Obviously, they plan to win. They've I think they've been strategizing for probably the last 4 years, which could be a very good thing for the country overall. So how to pay for it? Well, partly that's through the tariff conversation, right? So to offset some of that, cost to the budget and cost to taxation, talking about the tariffs.
So I mean that is definitely going to be an offset to it, is to start instituting tariffs on foreign goods coming into the U.S.
Hmm.
Which again, I mean, there's pros and cons to all of this. The immediate con to that is going to be it's going to start to raise prices, right? Because we
Well,
as I think a U.S. have gotten used to the goods made in foreign countries that are less expensive, and companies have
right.
naturally progressed that way because they're about making profit.
Well, and I think that's what the American people may have voted for the trade-off.
Right.
I mean, if you look at the fact that popular vote was won as
Yep.
well, they may be, a lot of these items that are possibly going to be on this list are not necessarily everyday
Right.
items, right? I mean, people talk about paper products. Well, we make a lot of paper products in this
Right.
country, right? So I think there's a trade-off somewhere in, it's a want versus a need. And if you think about that, you and I talk about that often when planning for retirement. Sometimes there's the want category, sometimes there's the need
Right.
category, right? So we could be looking at some of that.
I mean, there's the want, there's the need, and it comes down to having more control. I mean, that's one of the things all of us saw with, COVID is, okay, now that we're not able to get product shipped in, or even recently, with the strike at the workers that are unloading, the longshoremen. I mean, it was, what happens if this goes an extended period of time? I mean, a lot of our goods being shipped in. I mean, that's can have a dramatic effect. So there's a lot of positives to bringing it back in. And Wells Fargo has done a study on this to kind of walk through it. And I mean, I think, doing something like this where tariffs are going to put some constraints on the economy initially. You might see a rise in inflation, maybe even some unemployment, as they start to kind of shift and bring things back. But it's going to take time for corporations to adjust. If they're having to start to figure out, okay, how are we going to manufacture in the U.S. and start to maybe be a little bit more competitive. But I mean, that's good on the other side is it's going to start broadening, hopefully, that wage base and bringing more of that worker back into the U.S. So, and those dollars from the individual standpoint into the U.S. So,
and that's an interesting question about what kind of tolerance people have, right? Because we are very spoiled. We are very right now society. Give it to me now. And we have a lot of problems. We have a lot of fiscal, financial problems. We have a lot of, the immigration conversation. There's a lot of stuff out there, and you can't wave a magic wand and executive order fix it, to your point. And there is going to be a little bit of pain. Like, think about you doing your own budget, right? Think about trying to save for your own house, your first house, or whatever, or planning for retirement. Sometimes you have to go through some struggle, right, to get to the better part on the other side. When you first got married, for example, right, you guys probably weren't rolling in the dough right away, but over time, as an effective team, you kind of maybe, the goal is to get where you're trying to get to, and most people do. And I think that's what Americans are going to have to realize, is that in order to fix a lot of our problems, we're going to have to work through a little pain.
The old adage, right? No pain, no gain. I mean, it's exercise. Right. It applies to many, many things in life. It took a long time to get where you're at, right? So it's not going to be an overnight fix, first of all. And secondly, it's going to take some changes in what we do, and with those changes is probably not going to be comfortable for a while, and kind of bringing that back to the markets. I have always talking to clients, through this election timeframe, encourage you to take that long-term effect, right? That long-term view, of it, because the reality is what we're seeing today is markets' reaction to right now. Enjoy it because it's been really good, and the markets have kind of given us a boost, thinking, okay, we're heading in the right direction, which I think with this we can start to shift and maybe bring some of this back. But at the end of the day, as the effects of some of these changes come in, you're going to see markets probably react negatively, right? So this is ebb and flow, right? So it's not going to be all rosy and everything's going to be good with some of these changes with the tax cuts and et cetera. It's going to take time for the economy and everything to adjust to any change that happens.
The Tax Smart Retiree is your comprehensive guide to mastering tax efficiency for a flourishing retirement. You will find indispensable advice and actionable strategies designed to enhance tax savings, maximize Social Security benefits, protect against market volatility, and develop a customized retirement plan. To get your free ebook, click the link in the show notes of today's episode and download your copy of the Tax Smart Retiree right now.
And we're still unfortunately going to stay so divided that unfortunately I think we're going to see any missteps or anything that starts to have some negative response as we're working through these problems is going to immediately result in, this was the wrong choice, this person, and so we're going to have some of that conversation. We need to maintain some civil discourse to say, look, a mandate was issued. Let's see what we can do. Let's try to work our way through it. But we're going to have to take some lumps. Right. You can't fix all the problems, just magically, right? There's going to be some lumps along the way. The idea being that we come out the other side looking a little better. Right. And that maybe brings us to the immigration conversation, which is obviously going to stay a hot button issue. Right. You got the one side saying, okay, look at things saying, I think it was a Pew Research Center said that about 50% of the labor force growth in 2022-23 came from foreign-born workers. Right. Well, you have people saying, well, if you start shipping people out, you're going to lose a lot of your workforce, right? But then the opposite side is everyone's tired of the housing prices being so out of control that you can't afford anything. Young people can't get homes. Young married families can't start their families. well, that's going to help reduce the cost of housing. So again, we have to work through some pain.
Yeah, I mean, there's two sides to every single decision you make, and this is exactly kind of that side of the immigration. It's going to be hard on the economy, I think, in the beginning as we start to close down that immigration process and maybe even deport. I mean, that's one of the policies that's being looked at. And start to change that workforce. I mean, right now there's very inexpensive workforce that a lot of the companies are able to enjoy. So I mean, if that isn't there, that could cause prices to start to go up a little bit. But on the flip side, that could mean then that more U.S. workers are able to find positions, and we start to bring some of that workforce back to the U.S. And definitely, hopefully has a more positive effect on housing, because that's something that I think a lot of the younger generation that are just coming out of college, getting into their first career, starting to look for houses are, kind of discouraged. I mean, it's, interest rates are high, home prices are high. It's just not affordable. There's no way that they can afford it, especially if they come out with any kind of college debt. So,
I mean, you can go look at a house, that sold for, 250,000, 5 years ago, and it's 500,000 now, and it's 6 or 7%. It seems it's out of reach
when it
for too many people,
is.
right?
Yeah, because I mean, back at the 2, 3, 4% rates, I mean, that's a much more affordable house. Yeah, it's still a significant increase, but when you compound effect both of those together, I mean, it just puts it way out of reach. So
it puts that out of reach. Yeah. And we're seeing such a boom in apartment building all across. In my area, it's apartments everywhere. And I think my particular area, I think, is overbuilt, and because there was some jobs, there was a company coming in, and now that company's been delayed prior to the election. It's delayed for some other zoning reasons or something, but it's being delayed 3 or 4 years now. And so I think that this area is overbuilt. So now we're going to probably see a cooling of the home prices because of that. And so it's all like, we're going to see, we've been in a really weird, and unfortunately the country's been in a bad shape financially for the last 4 years. And that's not being political. It's just being factual.
It's the facts. It's just what's going on.
Right. So in order to fix that, and just like if you go back and look at any times that we've had, issues like that, there's a correction period, and that correction period is not always pleasant. What comes out on the other side, that is typically right. So we have to get there.
Yeah. Again, back to, make sure you've got those long vision glasses on when you're looking at this to understand that, things are rosy today. It looks really good. The markets are reacting awesome. I mean, everyone's enjoying this and thinking, okay, this is great. Absolutely. And I think in the long run, we can maybe make some changes to help get us back on the right track, but it's going to be painful to get there. So.
Well, and if you think about it, Phil, that's exactly like what planning for retirement is like, right?
Yep.
I mean, this is pretty similar. You've got to have a strategy. You got to have a plan. If you're down, if you're a little bit, underprepared at a time of life than you're in, you may have to take a few lumps in order to get you. Maybe that's pushing back retirement a couple of years. Whatever the case might be. Maybe that's spending less, saving more, whatever. But you can get there if you build a plan.
Yep. Have a plan. Have that long-term vision in mind. And look at things like this of, what is going to happen in the economy, right? We go through this all the time. It's everyone is up in arms every 4 years as we go through changes, but the reality is this isn't the first time at the rodeo, so to speak, right? We've been through this many, many times, back and forth each year. So we know this is going to happen. We're going to have volatility. We're going to have, ebbs and flows in the economy. And in the market. So make sure you build that out in your plan and understand that, this is going to happen. And just from even an investing standpoint, it's great that the markets are riding high today, but should that change your plan? Should you have made changes thinking that this would happen? No, I mean, that's not investing, that's gambling, right? Because now you're betting on, this outcome or that outcome. And I think I'm going to position things accordingly. It might have turned out well, like it has. It could have turned out, not as good. I mean, who knows? I mean,
it still could.
Right. We're again, markets are very forward looking, so they're counting on a lot of these things that have been presented as happening already. Effectively, they've kind of priced those in. So if they do, at best, we kind of right through that level. I mean, if there's hiccups along the way, I mean, we could see, a take back of some of that gain that we've seen just because of the market reaction to it. So that pullback.
Yeah. Well, this is kind of a preliminary conversation, Phil. We didn't want to get too deep on some stuff because, again, it's all speculative and there's lots of information out there, and again, none of it's going to be known until office is taken and work starts to get done. Right. Anything we might have missed that you want to touch on before we wrap up? And we'll revisit this in a couple of months and we'll start to see how things shape up. Yeah. But anything else?
Oh, absolutely. Yeah. That's what I was just going to say. No, I mean, as you look at this, don't make any changes in your plan based on anything that's happened so far, because the reality is we don't know. Everything we're looking at right now is all preliminary. Let's let the dust settle. Let's let things happen. As they do, now we can start to maybe make some adjustments, right? Even on that Roth conversion strategy plan, and for the clients we're working with, we're still following the same plan. To me, it really doesn't change the overall strategy over, long term. I mean, it might, to me, I'm just thinking of it, it might be that we can get a little bit more converted at these lower rates, and if they make it permanent, then good. I mean, ultimately, you should stress test your plan to see that anyways. If change does happen this direction, are we still good? And it should be.
Yep. So keep eyes on, eyes and ears open. We'll talk more about that stuff through the episode. So as always, if you got questions, need help, please reach out to Phil. Make sure you talk with a qualified professional. He's a CPA and a personal financial specialist, been helping families for years. You can find all the information in the show links below in the show description. Get yourself some time onto his calendar, get on the phone with him, whatever you need to do. All that information's in the show notes. It's also on the screen as well. And you can visit him at philstaxhacks.com. And don't forget to subscribe to us. We certainly appreciate the support as well on Apple or Spotify or YouTube. Hit the thumbs up, subscribe button, and the notification bell, and we'll see you next time here on Phil's Tax Hacks and Other Retirement Facts. Thank you, my friend.
Thanks.
Phil? Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.